Okay, perfect. Thank you. Yeah. Good morning for those who've joined. We're just waiting for others to come in, and we'll be kicking off in a couple of minutes. Okay, well, good morning, everybody. Unless we've got people who are dialing in from Asia, and good afternoon and evening to you. My name is Charlotte Croswell, and I'm Chief Executive of Innovator Finance. And I'm delighted to welcome you today to my fireside chat, and we both have the relevant fireside with Rishi Khosla, CEO of Oaknorth and co-founder. Rishi, welcome.
Thank you.
So our Leadership and Innovator series looks at welcoming global bank executives, fintech founders, influencers and change makers to share their vision on the future of financial services. I'm delighted that Oaknorth is able to be talking to us today. For those who don't know it, and I expect you all do, it's the next generation credit science platform focused on creating a better borrowing experience for the missing middle and growth businesses who are the backbones of the economies and communities globally. And prior to Oaknorth, Rishi was the CEO and co-founder of Copal Amber, which is a financial research firm which already has scaled to 3,000 employees and sold to Moody's Corporation in 2014. But also an early stage investor in PayPal and India Bulls. Rishi has a MSc in Accounting and Finance from the LSE and a BSc in Economics from UCL. Very much looking forward to hearing the journey today. Oaknorth has really been pushing the dial and just done an incredible job over the last year. I think if we'd been doing this 12 months ago, who would have predicted the journey that would have taken you during 2020? But obviously, starting a business, which is never easy. You've accomplished it a couple of times now with Copal and Oaknorth, and just be interested in you sharing your experience on your entrepreneurial journey with our audience today.
Sure. Look, starting a business is always one of the most loneliest things possible, because in a way, you need to have incredible conviction over your idea, and often the number of naysayers around you far outweighs the number of people who are positive around you. And therefore, having the conviction in your own belief and the mission is so critical to actually be able to drive yourself through that entrepreneurial journey, and also ultimately inspire your teams and your colleagues to come on that journey with you. So I'd sort of say the entrepreneurial journey, as I said, is an incredibly lonely process. And I've been fortunate enough, actually, both times round to have the same business partner next to me. And I would say that that's been incredibly beneficial through that process. And look, the first business we started when literally neither of us had any money in the bank. We put pretty much all the few pennies we had into the business. And I'd say we bootstrapped the business, in an incredibly stringent way. So the total capital we raised from friends, family, etc., was £185,000 to build Copal, and that's a total capital we only ever used £40,000 off that capital to build the business. So for 2-3 years we didn't pay ourselves anything. And everything was about selling during the day and doing the work at night ourselves, the research work, and then eventually being able to afford to sort of scale that to bring in individuals, etc., and the like. Obviously, building up Oaknorth was incredibly different to that, because number one, we had a penny or two in the bank, and number two, you had a situation where we were building a bank and a technology business, right? And both of those are reasonably capital intensive. So we went from building a almost no capital services business to a very high capital financial institution as in a bank, and then technology, and going through that and ensuring that you have the same discipline around actually frugality and approach to building as well was a culture shock fundamentally to anyone who we brought into the team, because again, both industries weren't used to the level of frugality that we built our previous business with. So I'd say the both entrepreneurial journeys have been incredibly different, but the consistency has been the loneliness. Even with a business partner, there are times where, let's say, especially on the early days, that everyone sort of has wobbles, and therefore sort of, like, what are you doing? Are you doing the right thing? Everything's always, the path is never smooth and like this. It's always, it's always sort of very up and down, and smoothing out the ups and the highs and lows to a point where you can just focus on the mission is absolutely critical. So yeah, that's a little bit about the journey.
Yeah, no, and I think people forget that, when you're looking at founders, especially, having had the success you have, it's people forget of just what it's like to start that and the courage of your convictions. Apart from your business partner, did you have other mentors or supporters to see you along the way? Who did you turn to for advice?
So I think that's been critically, actually very important for me through my career, having mentors who I've looked up to, who I've been able to bounce questions, ideas, perspectives, gain perspectives from, and those individuals actually have been quite consistent through my career. And if anything, over the years, what I've done is expanded that mentor base. And the way I think about mentors is that it's actually less about access, because what I've found is that if you have anyone in the world that you actually think it would be interested in what you're doing and could be helpful, and you'd be respectful of their time, most people are willing to give you some of their time, right? So getting setting sort of a very clear view of what you want from a mentor, and then trying to go and find that individual is an approach which has always worked for me. And as I said, sort of I've had 2-3 mentors which have been very consistent through the last, 25 years of my life. But that universe has expanded to probably today closer to 5 or 6 individuals.
Yeah, which is great. And any one piece of advice that sticks out that you were given that you remember?
One piece of advice which I'd say is atypical for a forum like this, but one which, and actually not given by a mentor, but given by someone who I just had met at actually an event. But he said that, and this individual had built 4 or 5 businesses, of which I think the first one was moderately successful. The second and third were busts, and then the fourth and fifth were like multi-billion-dollar exits, right? So he'd sort of been through a lot of gyrations, but he said that sort of you've got sort of lots of balls to juggle in life. There's only one glass ball, which is your family, and that's the only one which you can never let drop. Other than that, everything else is a rubber ball, and eventually it'll sort of bounce back, but just never let the glass ball drop. So you know what, I heard that piece of advice probably again like when I was 23 and I was doing venture investing, and it stuck with me, and I've actually followed that as one of my mantras through building businesses.
That's a great piece of advice. Do you think your family would agree?
I think they would agree. In a whole year, I try not to miss, and again, clearly in these times, it's amazing because you do spend a lot of time together. But pre obviously the COVID period, I try not to be away for even one weekend a year from the family. I try to always, irrespective of what or where, always be back with them.
Yeah, well, that's great, and great to hear that you've managed to build up such successful businesses with that mantra in mind. So moving on to obviously Oaknorth and your exciting journey with Oaknorth. You just talk about sort of how your role as a CEO has evolved over the last 6 years. I'm sure it's changed quite dramatically.
Sure. I mean, look, I think that the role of any leader of any organization evolves with the nature of that organization, right? So ultimately, at startup, the things which you need to do to actually put together the first foundational building blocks are very different to what you need to do 6 months, 1 year, 2 years, 3 years, 4 years, 5 years hence, right? And even today, I say to myself, if I'm doing exactly the same thing which I was doing 6 or 12 months ago, we're not moving forward enough as an organization. So, and obviously that a growth organization within that, right? Because as you're growing, ultimately responsibilities need to change. So safe to say that I've pretty much done every role you can imagine. As I always like to say, from cleaning the bathrooms to whatever. But it's sort of the evolution, the continuous evolution is so important, I think, in any role, because otherwise, as I say, you're stagnant. And within Oaknorth, we have the bank, and then we have the software business, which fundamentally are very different beasts in terms of the way that they operate and the metrics and sort of the just fundamentally the approach. One is around how do you actually take measured but minimize risk, right, while supporting businesses. The other one's actually how do you use technology, and in a way risk is sort of like you don't think about risk in the same way, right? Whereas, and obviously one's a highly regulated institution, one's not. So within that, there's just a lot of learning as well. And before I started Oaknorth, neither had I spent any time in commercial banking. And the last time I'd sort of got near code was probably when I was 13. So there was a lot of learning to do on both sides, but again, incredible fun.
Yeah. And to talk about your growth, for those who aren't so aware of the journey, perhaps talk about Oaknorth's growth in numbers.
Sure. So I mean, we launched the business in September 2015, so we've been running just over 5 years now. The business has gone from effectively from zero to in the bank. We reported for 2019 pre-tax earnings and sort of the mid to high 60s million pounds. This year we'll do better than that. We'll release our annual report shortly. So for 2020 we would have done better than that. So from a profitability perspective, that's where we are. We've lent about just shy of £5 billion in total. Our loan book today stands at about £3.6 billion. So we've obviously had just over £1 billion of repayments on the book. The total employee base is circa 800 people. We've raised about $1 billion of equity capital in the business. So those are some of the metrics. But with all of that, it still took us only 9 months from launch to hitting cash flow break even, and 24 months to actually pay back all accrued losses. So again, that whole focus on sort of building what I would say a solid business on solid foundations is absolutely carried through with Oaknorth.
Just picking up on that, do you think obviously the right product, the right time, the right management team, there's so many ingredients, and the right investors as well, is there anything that stands out of things that you managed to achieve that? Because there's obviously a lot of fintech founders and entrepreneurs listening to this today, and just be interested in sort of what ingredient you thought was the most important at the time.
So look, I think the core ingredient is for any entrepreneur is within themselves to have the hunger to actually achieve the success that they've, or the mission that they've set out to achieve. But within that mission, it's critical to also then be clear, actually, do you have a mission around actually build, what type of business do you want to build? Are you looking to build one which has, how can I put it, has a total focus on customer acquisition, number of users, activity, etc. And is that good enough? Which again, they've been incredibly successful businesses, which have purely had that focus and have worried about their revenue model and the business model later. But I would say there have been only a handful of incredibly successful businesses which have done that, and there have been clearly a much larger number of failures in that area, because that's a riskier strategy. Or do you want to build a business which fundamentally has a strong business model from day one, and you're very clear on what that business model is, and ultimately what you're doing is you're scaling a profitable business model from day one, right? And that's just a very different way to think about business building than the I'm in this to gain users, and with users I'll figure out how to monetize that later, right? So I think having clarity over that is so important to be able to achieve whatever, as I say, the mission, the goal that you've set out to achieve.
Yeah. And then obviously you started Oaknorth because you saw that opportunity from your first time round, trying to get that funding. Do you believe that that problem still exists, and and how far can Oaknorth go to helping to really move the dial on this now?
Sure. So look, I mean, we define the gap in the market, which is, I think, has been a perennial problem in nearly every market, as the missing middle. And these are businesses which are too large to really be serviced well by retail business banking type operations, but yet they're too small to be serviced by corporate institutional lending desks. And actually the businesses in the middle are actually those businesses which are high growth. They are proven businesses because they've got over a certain scale. They're typically in that scale up mode. So they're very material generators of employment growth and GDP growth within an economy. And yes, we experienced the challenge on actually getting debt financing ourselves when we were very much in that missing middle. And it's an issue which has sort of plagued the lending or the banking industry for forever. I don't think people have solved this in any satisfying manner. And one of the biggest challenges is that the cost of the underwrite to actually properly analyze and provide an appropriate loan structure for those businesses just costs so much that actually it's not economical vis-a-vis the amount of debt which is being raised. So therefore, without technology, without actually an alternative approach, it's incredibly hard to actually solve this particular issue. And I would also argue that us having spent 12 years building a financial research company, of which more than half of the team was focused on credit, actually provide us the foundation to even think about how to actually add technology to this particular problem area. So in answer, I absolutely do think it continues to exist. I do think that for Oaknorth clients, we've solved it, but within that limited group.
Yeah. And what do you think? I mean, obviously that's going to be, we'll come on to COVID in a minute, but it's becoming such an issue. It's exacerbated over the last year. Do you think there's changes you'd like to see from an Oaknorth perspective, to accelerate that change and close down the missing middle? Perhaps you want the missing middle there because they become prospective Oaknorth clients. But what else needs to be done, you think, to continue that growth for Oaknorth, but for other firms as well?
Okay, so let me answer that in two ways. So number one, we've within Oaknorth, obviously, we built our own lending business in the UK, our own bank, to prove through the model, to prove through the technology, to prove through that actually there is a good solution to the missing middle. And within doing that, we built a business which ranks within the top 1% in performance of all commercial banks in developed countries on a global basis, right? So I'd say that we've really proven the model. Now, taking that technology and actually putting it into the software and licensing that to other commercial banks in other markets enables those commercial banks to effectively address the missing middle and fundamentally sort of help fill the gap. Now, so that's in my view how the missing middle gets solved is adopting the Oaknorth's credit science platform. In terms of what can be done to help, it's interesting. Even if you look at within the UK and you look within what we're building with Oaknorth Bank, the fact that from a regulatory perspective and overall environment perspective, a lot has been done in the UK and especially in London to help startups and to help businesses sort of go through the innovation phase of actually saying, this is a business idea which could make sense, testing that. We've got the combination of having the regulator, having the financial center, having the top academic institutions, all within very close proximity to each other, which makes London quite unique on a global basis. But almost nothing has been done for those scale-up businesses. And if you think about it, the missing middle is exactly that. So even with the case of Oaknorth, we experience in different areas that actually there's good support for startup, and then there's after startup it's established, right? And actually there's this big piece in the middle, which actually requires some thinking. And obviously, if you look at the work that Ron Khalifa has been doing in his review, I think we fed into that, and I think his findings, I believe, are somewhat consistent in part that more needs to be done around this sort of scale up function and making sure that, for example, regulation is proportionate to making sure that actually the support and understanding of businesses in scale up have a different dynamic is important to a business which has no growth or negative growth, etc. So I think there's work to be done there.
Yeah, agreed. And obviously, talking of scaling up, you've got US expansion. Obviously, is potentially one of the key drivers of growth. And I know the US always seems as the most obvious market for many people to enter because of the size of it, but also potentially challenging, from regulatory approach, etc. So why choose US as your first international market?
So look, I mean, a few things. Number one, our previous business, just shy of half of our business was actually from the US. So it's a market which we've been operating in for many, many years. It's a market which we therefore have at least know our way around. Number two, clearly in terms of actually addressing the missing middle, the US is clearly the largest market. It has several thousand banks. And therefore, when we think about actually getting to the point where we're making a difference to the missing middle and delivering against our mission, the US is the most obvious place for us to actually to focus, and that's the reason why we have.
Yeah, great. I'm just like to come to COVID, and for those in the audience who want to ask questions, there is a Q&A function there. I see some questions coming in, which we'll get to a bit later. Obviously, I think we're all glad to be in 2021, although not the cheeriest start to it, perhaps. And COVID-19 is still very much an issue. We're working very closely with your team, and and just brilliant support from the team in some of the lobbying against government. But obviously, you were one of the first fintechs to get accredited for CBILS. Feels a long time ago now. Talk about the process there, and and some of the opportunities that maybe arose out of it as well.
Sure. So I think, look, the COVID period's been incredibly interesting from the perspective of actually how do you continue supporting the businesses that we were supporting? How do you support new businesses? And also, how do we actually take a lot of our learnings and help other commercial banks sort of navigate better, right? So if I take those in parts, we started running scenarios against our loan book in terms of stress scenarios related to COVID in January last year. Now, clearly, January last year, the scenarios were all related to anything related to China and supply chains. But we very quickly, during February, early March, started actually saying, what if the virus actually comes to the UK? What impact does it have on the UK, etc.? And we started running lockdown scenarios early March against our own loan book. What that meant is that when actually there was widespread rumors about a potential lockdown, we had already gone through our whole loan book on a loan by loan basis. We had identified what different businesses would potentially need to do, and effectively we had a plan, right? So as soon as literally within 24, 36 hours of the lockdown being announced, we'd gone through, contacted all of our borrowers and sort of started both sharing our scenarios of what we think this could look like, because again, and we had certain borrowers who were like, this isn't going to affect us, right? We're in XYZ part of the country. This is, if it affects anywhere, it's going to affect London. It's not going to come to us, etc. And literally 4 or 5 days later, they said, thank you so much for taking our head out of the sand, right? So we shared our scenarios. We also started sharing best practices. So for a particular industry, and literally really practical things. So if you are going to lock down, how do you make sure your insurance is invalidated? How do you make sure you've got security on all of your sites? And you know, you're not at risk of break-ins. How do you make sure you sort of manage, I don't know, water connections, right? So all those types of things we started sharing across our borrowers. So actually there was how do you prepare from a financial perspective, but there was also a part of it was how do you prepare from a practical operational perspective. So we did that, and then we embodied sort of all of that into what we termed a COVID vulnerability rating, which was effectively based on our forward-look scenarios. How are you set for this particular period? And within that, very clearly, what started being very evident is that there are going to be some businesses and segments which win as a function of this, and there's going to be many which don't. And also at the other end, when we eventually come out of this, there is going to be structural change in terms of scarring on certain industries, and again vice versa, sort of a amplification of performance in others. So we actually split out the economy into now 204 different subsectors, and we built out scenarios for each of those subsectors. And that's the framework which we both use within our own bank, but also with other commercial banks. And we're able to actually apply that and run a forward-look scenario across their whole loan book on a bottoms-up basis, literally within minutes. So doing all of that has enabled us to continue lending through the COVID period, because we've got confidence that our scenarios are conservative enough that actually, as long as a business can survive those, it's a good lend, and also clearly giving us a very good sense of where our loan book sits today. And we've had exactly the same benefit as we provided that framework in our software to a number of banks, and we probably had over $1 trillion worth of commercial loans now run through that framework, and again, just incredibly sort of positive views on how that's helped institutions navigate the COVID crisis.
Yeah, that's fantastic, and just so great to hear. What What are your general thoughts on the impact COVID's had on the attitude towards fintech and innovation in financial services? We heard the Chancellor talk about Big Bang last year for FS. Do you think COVID is going to be the Big Bang for fintech?
It's interesting. So COVID has definitely accelerated adoption of digital at the consumer level, without a doubt, and actually within the corporate, within the workplace, right, for obvious reasons. So when you put that together with what most fintech businesses are about, they're about improving a journey, they're about sort of reducing friction, they're about changing the way that a particular activity is carried out, typically, again, using more technology. I think broadly, this should be an accelerant for fintech. So yes.
Yeah, and we hear that the regulators are piling on the pressure as well, quite rightly, to ensure the health of the sector. Do you think that's going to result in some firms perhaps not surviving, just like we're seeing in other parts of the economy? What's your approach to that? You talked about proportionate regulation, but obviously it is about giving that trust to consumers and businesses alike.
Yeah, sure. So I think, look, I mean, broadly, I think most regulation is incredibly sensible, because most regulations around how do you ensure the long-term viability of a business, right? And the long-term viability ultimately means how do you keep an institution safe, sound, and how do you do the right thing for your customers? Because that's clearly what drives long-term longevity. So broadly, the rule set is actually, as I say, sort of very logical. The issue is exactly that. It's proportionate, right? And there are areas where it's not proportionate. And that's just the rules haven't been developed with with sort of the awareness that there are lots of different shapes and sizes of organizations. The rules were very much developed around an industry which was full of larger incumbents, right? So do I think that there are going to be businesses which don't make that cut? Yes. And do I think that's healthy? Absolutely. Do I think that gets accelerated because of COVID? I think the sustainability of an organization which doesn't have a business model, which doesn't have a good way to actually fundamentally generate cash and sustain itself. Again, regulators should look at those, right, to make sure that they have got adequate funding and adequate runway ahead of them. And if they have, that's great, right? But if they don't, and they don't have a good business model, and they don't have adequate funding to sort of create that runway, then again, you need to, given that it is financial services, I think it is important to protect the customer.
Yeah, and that is it. This is consumer and business at the end of it. So looking ahead, fintech has had a boom few years, obviously, since it's been created out of the last financial crisis. And you touched on the Khalifa review, which is due to launch next month. What are your hopes for that, and where do you think we can go next in the UK's fintech story?
So look, I think the UK has done incredibly well in terms of building a fintech hub, in being arguably one of the leaders in fintech innovation. To double down on that, I think is actually incredibly important, and therefore I think the fact that the review was actually requested by the PM, the fact that Ron has spent so much time on it and has been so diligent around it is incredibly good. And my hope is fundamentally it enables that doubling down. It enables the government to realize that actually they need to continue to invest in making sure that you get the right talent into the country to actually continue that vibrancy, to making sure that actually the proportionality, like we talked about, of regulation actually does come through, to make sure that there is actually that support for growth businesses, i.e. the success of British fintech isn't going to be that we started 1,000 fintech businesses. It's that we started X number and Y number scaled and have had a material impact on, on delivering for against their mission. So sort of and I think the fact that sort of the fintech should be almost the poster child of the UK, to show that innovation is important and possible, also drives the broader ecosystem around actually increased investment in pure technology and healthcare tech. I mean, again, we've got incredible talent when it comes to medtech generally, and actually continuing to build that's important. So I think that broadly it's ensuring that there's a doubling down on focus by the government in terms of the fintech sector.
Yeah, and I think some people are, believe that's dipped a little bit recently. Not just the last 12 months. It's obviously with big focus on Brexit and less so on growth areas. But I agree with this. That I think fintech can be a poster child. We saw us trying to catch up with tech back in the late 90s, and we just could never keep up. We couldn't keep up with the valuations, the analyst coverage, the investor base, everything that the US had. But in the UK, you have actually government, industry, regulators working relatively closely alongside, and obviously, as you say, a lot of people are fed into Run's view. So hopefully, we can showcase the poster child of fintech and restart that tech strategy. Before we sort of move on to questions, sort of talk about exciting news on the horizon for Oaknorth, and when you're sitting there in your lonely journey, and what are you most excited about?
So look, I'm excited every day. So as I said, look, we'll put out our annual report for 2020, hopefully in the next weeks, and I'll just show what we've been focused on. The fact that we're able to continue supporting the businesses we do and supporting new businesses in the UK is incredibly satisfying. So having helped generate something like 20,000 new jobs and probably 19,000 new homes in the UK since we started is a good thing for us. Getting the software platform embedded and scaled up in multiple other large commercial banks is very high up our list. So again, we've obviously made announcements around banks like PNC in the US, SMBC, their US business as well, and others, Customers Bank, Modern Bank in the US. We'll be making a number of other announcements, hopefully, in the next weeks, months, around additional customers which we're working with and partnering with in the US. So you put that all together, there's just a lot of activity on both sides of the business, both on the lending side as well as on the software licensing. Yeah,
no, well, that's great, and it'll be exciting to watch the journey as we come out of COVID, because I'm sure it's got a major role to play as part of economic recovery. Just on my final question is, obviously you're a very successful entrepreneur. You've done it twice, maybe a few more times to go. Who knows? Give us 3 top pieces of advice you'd like to share with other fintech innovators.
So I'd first like to qualify the successful. I would say modestly rather than very. I still view ourselves at the beginning of our entrepreneurial journey, and ultimately it is the key point for me is staying hungry, right? Because ultimately, if you lose your hunger, you'll never want to drive. You'll never want to sort of go that extra mile, which being an entrepreneur is all about. So hunger is the most important factor. I'd sort of say second, and look, we've had our ups and downs on this as well. It's sort of don't hire the first person who walks through the door. Take the time to hire the right team. You'll always make mistakes, and if you make mistakes, again, it's better to acknowledge those early and do the right thing on both sides. And then I think the third thing is there's a lot of value in bootstrapping a business, because you create a fundamentally stronger business which is being bootstrapped too much money too early on can lead to all the bad disciplines and such.
Yeah. Great, thank you. Well, I'm going to move to questions now. Some of which you may want to answer, some of you may not. Firstly, on Brexit impact, talk about several fintechs that only have offices in the UK realised their market was suddenly reduced from 720 million people as a consumer base to 60 million people. And is that a concern for Oaknorth?
So look, I mean, my view is that we've known about Brexit for multiple years now, right? And if Europe was a critically important part of your business, you know, ultimately setting up a base in the EU would have probably been a good risk mitigant strategy against that. So from our perspective, we don't necessarily, how can I put it? We did the thinking very early on what it means for our business. And for the UK lending business, actually, it has the only impact it has is the potential credit impact for businesses we've lent to, which obviously we've been on top of since literally 2016. And for the software business, it doesn't actually make a difference for us. So for Oaknorth, not a material point, but in general, I would say it's not like you wake up one morning and realize this has happened. It's probably been the most talked about thing in the media ever in this country for multiple years. So, yeah.
And, it's in some ways, I know that most people would disagree with me, but it's quite nice just to move on and see what comes next, and hopefully resolve. What are no doubt going to be a lot of issues.
Yeah.
Talking about Francisco Lorca's asked a question on your vision for how Oaknorth's going to look in 5 years, size and offering.
Hey, Francisco. So in terms of how Oaknorth's going to look in 5 years, we want to have a very material impact in the UK on the missing middle, actually closing that gap to the point where it's recognized that Oaknorth has actually closed the missing middle gap in the UK. On our software, we want to get to the point where credit intelligence, which is how we term the space we're in, really gets defined as a very clear space, and also a space which commercial banks feel like is a essential part of their tech stack, and clearly in the key markets which we're focusing on. So 5 years hence, we sort of view having credit intelligence as part of the bank tech stack as something which is almost the default assumption rather than something which is innovative.
Thank you. Question from Keith Bear. Controversial on this. What's your view on fraud levels in CBILS?
Interesting. So I think fraud levels on bounce back loans are incredibly high, right? And we made a conscious decision not to get involved in bounce back loans. Number one, it's not the part of the market. Typically, the smallest lending that we would do is $500,000 and above. So from that perspective, bounce back loans didn't fit in. But when we looked at it and sort of said, could we help in some way actually act as a conduit for fundamentally the government, we also just felt the level of fraud risk is going to be incredibly high. When you look at CBILS, the level of fraud risk in CBILS is much, much lower. And I actually do think that if there's been, how can I put it, inappropriate application of the eligibility criteria, I actually think the banks will end up having to pay that cost rather than the government, which is rightly so, because I think the eligibility criteria may be complex, but it's very well set out, right? So I actually think from a government perspective, fraud in CBILS, I think, is going to be very low in comparison to bounce back loans. And broadly, if there is, I think it's more a question on a look back on eligibility criteria, which is really then driven by how good or bad individual lending institutions, systems and processes were.
Yeah. Very, very tough, I think, for everyone involved at the time. Just such quick decisions having to be made. Where do you think, Scott Marshall's asked a question on where do you think commercial and residential property values will be in 12 months?
Generally lower. I mean,
That's all.
if you think what's happened, I mean, obviously resi property has been propped up by the stamp duty holiday. Also, the level of savings has been incredibly high.
Yep.
And, almost all-time highs in terms of levels of savings. As the furlough scheme sort of peels off, as sort of some of the economic pain starts filtering its way through the economy and down to the consumer, I think that's going to inevitably have an impact on residential prices. Commercial, clearly, there's a lot within commercial. There's a lot within residential as well. But the difference between retail, offices, leisure, etc., all will diverge in different ways. With obviously retail, probably general retail, high street retail being the hardest hit. But even offices, I mean, we've done a lot of work in terms of actually what this whole period could potentially mean for office demand and space. So that will ultimately have a filter through effect.
Yeah, thank you. Question from Harsh Gambani. How much of your future revenue mix do you expect to come from the credit platform? Given the lowering margins and higher credit risk on pure lending businesses, do you see that as a risk?
Sure. So I wouldn't necessarily say that. Again, we have a very specific model. So the lowering margins, I don't necessarily agree with, because sure, base rate's gone down. The base rate affects both your cost of liabilities, i.e. deposits, as well as your assets, i.e. your lending. But I think that the software part of the business will be a material contributor. I'm not going to give more insight than that.
Yeah, okay, thank you. And there's a question also on the sort of difference between your credit intelligence in the Oaknorth platform and credit reporting that is performed by the existing reference agencies.
Yeah, so credit intelligence is around how do you make a better credit decision, and also how do you monitor a credit in a more proactive manner, and also how do you actually stress test your loan books based on varied scenarios, basically on the fly. Whereas credit reporting by rating agencies is fundamentally fine for rated businesses. But those are also static ratings because they're not dynamic. But within commercial lending, we're talking about loans of whatever, from a few 100,000 to whatever, 20, 30 million, and those businesses aren't generally rated. So what you get from the rating agencies doesn't necessarily give you insight on that on an individual company level.
Thanks. You're an anonymous attendee, but they've asked, what's the riskiest decision you've made?
Not answering that one.
Nothing's risky.
Exactly.
Alexa Sokolov, sorry, I hope I got the pronunciation right. Where do you see the biggest innovation happening within specialty lending space in the next few years?
In credit intelligence, of course.
There you go. That was easy. And the final question, which I think wraps up our session really well, from Dan New. Do you see Oaknorth expanding into other industries and sectors, beyond banking?
Really interesting question. I would say that there is that's sort of like in the potentially one day category, but definitely not in the we've got a plan category.
That's okay, as long as you keep the door open, Rishi.
There we go.
I mean, Rishi, that was a fascinating, stop tour of your personal journey, your professional journey, and just hearing more about Oaknorth and where you're going. And as I said, I know how hard you work all the time, and I know how hard your team has worked over the last 12 months, and all credit to them for driving the business forward, and obviously to yourself and your partners. From us, we'd like to thank you. Just a couple of things to notify our audience on. The Fintech Strategic Review, which we talked about today, the Khalifa Review, is due to publish in the next few weeks. I know Ron is working 24/7 on getting that over the line, and we thank everybody, including Oaknorth, for inputting into that. Just had an incredible buy-in from the industry and across the world. I think it's over 300 people have inputted into that. So excited about that. Our Women in Fintech Power List The applications closed last week, record number in compared to last year applications. So I know team of judges have a hard job ahead, and we've seen obviously Oaknorth staff on that list before, hotly contested. And then looking ahead, to a brighter spring, hopefully, UK Fintech Week is going to be the week of the 19th of April. I think we're going to be mostly virtual. Who knows? We may be able to get a small gathering in somewhere very large building distance there, but very much hoping, Rishi, you can join us during that week and give us an update as we hope to look at brighter times ahead. But for now, thank you so much for your time today, for your honesty and your openness of answering the questions. Really appreciate it, and all the best of luck for 2021.
Charlotte, thank you so much, and thank you for everything that you guys do, you and your team do for the fintech industry. So thank you.
Great, and thanks to our audience. Thanks.